What's going on, boys? How you guys doing? What's up, Ricky, Tonka, G Money, Ginger? Oh, what a day, guys. Amazing day. So, everyone knows what happened today. Insane rip. I'm not going to be like the guys on Twitter and where you find everywhere else that are going to be like, oh, I called this, I called this. No, I did not call this. I had no idea this was going to happen. If I did, I definitely would have made a lot more money today. So honestly, like I look back at my trading on this week and I could have done better, like way better. It's not usual for me, but I have to admit it. You know what I mean? I'm gonna go over what I did this week, what I did right, what I did wrong, and we're gonna kill it next week as well. So this whole run basically down, we crushed it. We crushed puts on almost everything this run down. The problem was, in my opinion, this was buy the rumor, sell the news, or sell the rumor, buy the news. So basically, this whole sell-off was in anticipation of Powell. As soon as we got Powell's actual news where he confirmed the interest rate hikes of 25 basis points, the market just went nuts. So the market got some kind of certainty into it. That's all I can, that and the OPEX is the only reason I can think of, because macro-wise, everything is screwed. Can we come right back down next week? Absolutely, guys, we can come back down next week. Does it look very bullish right now? Yes, it does. So now that we got OPEX out of the way, we can see the real market move next Monday. What's up, Turkey? Exactly. Like, you're gonna go on Twitter, everyone's gonna be like, they called this. I'm sure a lot of people got hurt today. My account was red. I'm not gonna lie. I do have some puts for April 14th. I was planning on adding to them today, but I did not. I did not, just because the strength was a little bit more than what I wanted to see on a bear market rally. But if you guys look back, I know Tonka crushed it, T crushed it, Goldman Sachs, a lot of people crushed it. So congratulations to you guys. I'm very happy for you guys. And next week I'm going to try to be better. So this is what I can say about this rally. Can this be another one of these? Absolutely it can. But another thing is, we didn't cross the 50-day moving average on this rally. We didn't cross it on this rally. We didn't cross it on this rally. The last time we were closed over the 50-day moving average was back in January 12th was the last time we closed. Yeah, so here, this is the same kind of bounce happening. So big downtrend, big bear flag, but we did not cross the 50-day moving average. Big downtrend, big bounce, bear flag, did not cross the 21-day moving average. Big downtrend and big uptrend. So one of the things you have to notice is that the low didn't get taken out here on Monday. Once we didn't take out that low, it was a sign that we probably should have stopped taking puts. What's up, Vinay? How you doing? And other than that, I mean, the bounces look very, very similar. If you guys look from this low to this high here, we had a 7% bounce here. All right, on this bounce from this low to this low high right here is a 6.3. I guess you could take the lower one right there. So 7% and 7% on both bounces. The only difference here is we closed above the 50-day moving average. Yeah, we can, brother. So 7% bounce here, 7% bounce here. Do we go and take out the lows? It's absolutely possible. I know it looks very, very bullish right now. If we're bullish next week, I will flip bullish as well. If we're bearish next week, everything stays the same. The macro picture is still the same. No good news has come out to warrant this kind of rally. And this all might be OPEX related. This is the largest OPEX out of the in the money delta options, which means when people get squeezed out of their puts, market makers have to buy the underlying stock to push it up higher. So a lot of buying was done by the market makers today to get delta neutral, and that's a little more complicated. But other than that, now that OPEX is out of the way, finally next week we can see the real move. There'll be no flows underneath to protect the supports next week, so we have to watch. Right now, very bullish. This day, this rally, everything was very bullish. We took out some key resistances. You see this very key resistance on QQQ get taken out. We stopped right at the 50-day moving average. So Monday, what you have to watch for on QQQ is this 50-day. If we close above 351.86 on Monday, it's going to be very, very hard for any puts to be played. 351.86. Today we got to 351.79. We need a close over that on Monday and then full bull mode if it does close over that. We do need some consolidation. I mean, we went straight from almost oversold and we're going straight up in a line. If you look at the 4-hour charts here, every time it's oversold, I usually buy. So the same thing goes. Every time it's overbought, it might be time for put. So it might be time for a little pullback. The highest RSI on the 4-hour ever since February 2nd. Would you look at that? That last rally that I pointed out on SPY back here. February 2nd was the last time we were this overbought. And you guys seen what happened the next day after we were overbought? A big red day right after February 2nd right here. We closed February 2nd at 457.35 near the high of the day. The next day we closed at 445, guys. So we closed down 12 points on SPY in one day. So if the same thing happens on Monday, SPY would close at about 432. 432 on Monday close. Keep an eye out for that. Other than that, I mean, it is a pattern. Does it have to copy it? No. Can it keep ripping? Yes. But we play patterns because patterns, history doesn't usually repeat itself, but it does rhyme sometimes. Here's XLF, noticeably weak all day. Well, it was strong, but it stopped at the 50-day moving average exactly, which is at 39.02. So make sure you're watching 39.02 for a close on Monday. If we close above that, then again, banks can run. If we close below that, then we have a chance to pull back. Right now, we're on top of the 200-day. And we're rejecting the 50-day. We closed exactly at 39.02, 50-day exactly at 39.02. Let's see if we can get follow through on Monday. Here's IWM here. Just basing. First close above the 50-day moving average yesterday. Today was follow through, and 209.55 is the base area. Why is this the base area for me? Zone out. Look at all this support. So the previous range was 209.55 up to 234.33. If we break back into that range, I expect more sideways in that range. But if we reject off 209.55, we can come right back down to 188. Next week is very important as well. Here's VIX. We lost the 50-day moving average, but Bookie pointed out this sloping uptrend on the VIX, which we are just above on Monday. As long as we hold above 2350, 2340s, VIX will be absolutely fine, and we might come right back up. Right now, it's still a higher low. As long as we hold above 1993, this is still a daily uptrend, and even if you look at the weekly, it's still sloping up until it breaks that little trend line. So keep an eye on VIX. See, I think 2007-8 would be the best comparison for the VIX. So this is the VIX in 2008 on a weekly time frame. We put in a low, we put in a high, we put in a higher low, and then it just went nuts. Then it pulled back a bit, but it stayed elevated. So it was pulling back, but it would have big bounces on the way and it would stay elevated. It would take a long time to break that weekly low, which is kind of what's happening right now. It is coming down, it is breaking down, but as long as we stay above these levels down here, we can have bounces along the way. Might form a bear flag, might come down, might spike right back to highs. Let's see what happens. Mara is one long that I took today. Why did I take it? Honestly, I seen Bitcoin's chart. I seen Mara's chart. Huge, huge. If you look at the weekly on Mara, let me show you this support that I seen. So there's a huge support on Mara here at the $20 to $18 level, as you guys see. It's respected it on every single Bitcoin downturn, and it's never broke below that support. So today, yesterday, last 2 weeks actually, very, very weak candles came down, and this week we put in a bullish engulfing candle over the last 2 weeks, which indicates to me it wants to go up. This week it was up 24% total. Everything just looks bullish on this Mara, and then I opened up the Bitcoin chart, and not the weekly but the daily here. The RSI is curling up, stochastic's curling up. We had a little mini bull flag. We broke up off this support. We had a head and shoulders, held the neckline, broke up, bull flagged for one day, and then we broke up over it. So Bitcoin looks bullish going into this weekend. Mara looks bullish, so I took some Mara. The reason I took MU puts at the end of the day there was, I'll just show you my watch list. So I have this little watch list on semiconductors right here. If you guys look at these watch lists, you have AMD up 1.58%, which was one of the weakest ones yesterday. Still struggling with that resistance. Nvidia was absolutely flying. I don't know what got into Nvidia, but high volume buying. Looks like funds rebalanced into Nvidia. LRCX straight up in a line. ASML breaking over the 50-day. LRCX broke over the 21-day. Marvell closed above the 50-day. TSM was one of the ones that was whatever. It's kind of bull flagging here under a huge support base. So I didn't take that one because there's a little bit more room to that resistance. But then you go to MU, and MU looks like it rejected right off the 21-day, closed near the low of the day. Could call it a bull flag, could call it a bear flag, kind of stuck between the 8 and 21. And I took April 1st put. So if we get a gap down Monday morning, just as a cool off, like I'm not saying we're going to go straight down. I'm saying just to cool off, we might get a gap down in the indexes on Monday. And if we do, MU should gap down the most just because of how weak it was. It's the only chip that closed red today. We opened today on MU at 79.10. We close. That doesn't make sense. Why is it showing red? Yeah, so pretty much the only one that showed on this whole list red. This SOXS is a triple bear ETF for semiconductor, so that one doesn't count. But other than that, I mean, MU is by far the weakest. That's why I took the puts. Let's see what happens. JPM, also another one to watch for weakness next week. Why? Because big sell volume closed red. This is one of the only very few names that I seen close red today. And it looks like a doji right at highs, right at the top of this bear flag. There is also this resistance here from previous levels. This is previous support at 140. So we close right beside that, and if there's weakness next week, watch for JPM to move back down towards the bottom of the bear flag. UPS, I know it's on everyone's mind. It is strong, I'm not going to lie. It closed above 218, which I do not like. Next week, we really need a push under 219, or else this one, I might have to cut it for a loss, just because it's showing too much strength. I know it's red on a day like today, which is signaling weakness, but we needed a close under 218. So let's see, next week will be the last week I'll give it. We have till April 14th. Even FedEx put in a hammer candle after meh earnings, not very good. Other than that, let's go over a couple charts and then we'll call it a weekend. Baba here, absolutely beautiful. It looks like the bottom is in on China, in my opinion. Will we have pullback days? Most likely. Will we have consolidation? Probably after 36 and then 8%. So we have 44% move on Baba in about 3 days. PDD earnings on Monday, you have to watch those for all Chinese names. If PDD rips their earnings, I think all of China will run with them. Other than that, very strong, and let's see where it goes. Right now, I do have a resistance here between 108 to 110. Over 110, Baba should go to 115, which is a 50-day, and then here comes the big resistance up here, which is 124. So over 110, 115 comes easily, and then if it gets over 115, the big resistance is here, about 124 to about 138. So that's going to be a lot of supply overhead, as you guys see from months and months of people. Other than that, we'll do Tesla. Tesla was a beast at the end. So if you guys don't know what OPEX was, there's a lot of funds rebalancing their portfolios today. And someone was trying to hold down Tesla into the end of the day. So it looked very likely like a 900 pin on Tesla, as it was just dancing around 900 all day, while everything else was absolutely flying. If you look at Apple, you look at Google, you look at Amazon, you look at Nvidia, they were absolutely just flying all day, right? Tesla, on the other hand, just completely flat, like just bouncing around 900 all afternoon. And then at the end of the day there, we got this big rip, and that was probably funds rebalancing their portfolios and adding some Tesla in my opinion. So other than that, if you go on the daily here on Tesla, we closed above. Did we close above? 50-day moving average is at 903.87. We closed above the 50-day moving average. So Tesla, if on Monday we close above the 50-day moving average again, Tesla has room to run. It has a lot of strength. You know, it's a cult stock. It can keep going. But if we close below 50-day moving average, this one should come back down and retest this previous resistance here, which would be around 830. Big pullback is possible on Tesla if we reject this 50-day on Monday. If we get through it, a lot of room to run. Other than that, FedEx will do. Here's FedEx. Pretty bad earnings. I mean, they missed EPS. I think they were flat on revenue estimates, and their guidance wasn't too great. But big gap down. I mean, it got oversold right at the beginning, so it kind of went just flat at the beginning of the day, intraday, and we closed not near the near the high of the day after the gap down, basically. But still, it was down 4% for the day. On the daily, remember, this is a chart. FedEx actually leads the economy. If you watch the FedEx chart, it usually shows where the market's going before it goes there. So last year, I mean, in 2018, it showed you like it started dumping and then the rest of the market followed. So FedEx dumped first, rest of the market followed, and FedEx just kept dumping all the way into COVID. So it dumped into COVID. It showed you that a dump into COVID was coming, and then a huge rip, which is exactly what the whole market did, formed the same exact pattern, head and shoulders, and it broke it, it bounced it, and then it completely collapsed. Is it doing the same thing? It's very possible, in my opinion, to have 1 or 2 weeks on FedEx just to cool off this RSI and these stochastics, 1 or 2 green weeks, and then a complete collapse with the rest of the market. So that's my guess on FedEx. Obviously, anything can happen, but the weekly, whenever it gets oversold, we do bounce usually. So we got the weekly RSI right here, big bounce. Weekly RSI back here, big bounce. Another one right here, big bounce. So even like 2-3 weeks of bounce on this market is very possible before the real rollover begins, just to screw all the bears and turn everyone into a bull before they change market so they can screw the most people possible. Carlos, I'll do AXP and then I gotta go. It's the weekend. AXP looking like broadening wedge. Still, that pattern is still working. Weekly, what a weekly candle, up almost 14%. It's going back up to the top. I know a lot of people want to short this one again, but I will wait for my signal. My signal on this one would probably be the top of this broadening wedge, so I'm going to give it a couple weeks. Like I said on FedEx, most of the names right now in the market, they're moving together. It's like if the market bounces, everything goes up. If the market goes down, everything goes down. So you have to zoom out, especially like what I just said on FedEx. I know it looks ugly. I know everything's bad. The chart is bad. We broke the head and neck to the downside, but the weekly RSI is very, very low. Just like it was here. Look at this right here. It's exact same pattern almost, guys. Looked bad. I'm sure there was bad news about the rates and stuff. RSI got oversold. We went on an almost month-and-a-half bounce slowly upwards, and then the real move came. Are we setting up for the exact same scenario? It's definitely possible looking at the RSI and everything. And make sure you're watching FedEx because FedEx usually leads the market. That's a secret that no one will tell you. And when FedEx is ready, then I will short everything. But for right now, I gotta chill and just watch and see what happens. It's definitely possible just to grind up, just like we did here. Like if you look at the actual move, we broke the head and shoulders. We grinded up for 1, 2, 3, 4, 5, 6 weeks straight. If you buy puts right now, you're gonna get screwed within 6 weeks. But if you actually look at the move from the low here, go over this before I leave right here. If you actually look at the move from this low to this right here, it was only a 12% move in 6 weeks, but it was slowly grinding higher. These 6 weeks of slowly melting up, slowly grinding higher would have crushed any puts you had. Look at the small volume that it grinded up on. This is just the market maker screwing puts until the real move comes. Once 6 weeks is done, all the bears are going to be like, yo, I'm done with this. Like, I lost so much money on this. And then the real move comes and they're like, oh, damn it, I knew it, I knew it. Other than that, make sure you're watching FedEx. It usually leads the market. And thank you guys for attending. I hope you had a great week.